Good morning. It's Friday, the 19th of July, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai. Our take for the day. The Karnataka government has pulled back or put on hold for now a job reservation bill for Kannadigas or those who belong to Karnataka. The bill was cleared by the state cabinet on Tuesday and it stipulated some 50% of reservation for locals in managerial roles and 70% in non-managerial roles, all in private companies. Now, industry was not consulted about this or informed, as was evident from the swift backlash from all over. Now, Karnataka is obviously not the first state to come up with this idea. Before Karnataka, it was Haryana in 2020, Andhra Pradesh in 2019, and Jharkhand in 2023. They all tried to implement reservations for locals in private jobs in some form or shape. All three states provided for the quotas with salary caps. All these proposals are languishing with the courts and the government. Now, there are, of course, several problems with these proposals. First is the nature of such a bill, which obviously acts as a deterrent to investment because any organization, if told who to hire and in what context in a competitive market, will walk out or not invest at all. Second is the manner in which it seems to have been pushed through with little or no discussion, including with industry, who, if alerted on such an intention, would surely have been better prepared for it rather than being shocked out of its wits. The no discussion part is, of course, seen frequently in policy making across the board nowadays, but we're talking about Karnataka today. Now, third, of course, is the fine print. Who is a local? Is it someone domiciled or someone who speaks the language? Now, all these things were, of course, added in, but it's still tricky territory. The Times of India reports there have been demands for a local quota for Kannadigas in private sector jobs going back to the Sarojini Mahishi Committee reports proposals in the early 1980s. Several iterations of it have apparently been tabled by governments since, including the previous BJP government. It's now a Congress government, but did not go anywhere. The current proposal by the State Labour Department is titled Karnataka State Employment of Local Industries Factories Establishment Act Bill 2024. Obviously, if you read that title, it does not exactly give you an indication of what or where this is headed. While it drops the term Kannadiga, a local has been defined as one who has been domiciled in the state for 15 years and meets certain criteria of knowing the Kannada language. So now the larger problem, which is that there is a jobs problem in India, regardless of what the highly massaged data put out by some quarters in government are telling you. And you can see it when tens of thousands of people land up to apply for a few hundred jobs, public or private sectors. So if there is one signal that went out in the recent elections, at least in my understanding, it was that there is a problem of jobs and aspirations. Of course, governments have oversold promises of jobs and prosperity, and perhaps that is coming back to bite everyone. But the fact is that India's population and aspirations are growing, and then that there are not enough jobs to meet them. The politicians are reading the signals exactly as they are being transmitted. You may question the response, as I would, but you can't question their judgment. There is no magic bullet for India's jobs problem. The problem is only if the promises are too grand or the inequality too stark. I remember a lecture I attended where the speaker once spoke about how two cars driving alongside in parallel lanes were moving slowly. Then the next lane and the cars in it start moving faster. Now the driver in the slow-moving lane does not really worry because she thinks that her lane will eventually catch up because that sounds logical. And that's what keeps most people expectant, that there is economic progress, and that's good because even if there is no immediate trickle down for me, it'll happen at some point later. Now, people may not riot in the streets if that does not happen, but that surely means that they will not vote you back into power, particularly if your lane never catches up with the one next to you. The jobs problem needs far greater nuance and focus in addressing and cannot be resolved by quick commentaries such as this. We can only highlight that this is the problem and people should focus here rather than in releasing reports which suggest that all is well. Which takes us to our top stories and themes for the day. The Sensex crosses 81,000. The markets are at record highs for the fourth day and buck global trends. Infosys beats street estimates. Rice inventories are at record highs and government could now open up exports once again. Is Indian aviation infrastructure ready for the big demand growth? And finally, are the days of revenge travel ending?
This is the Core Report with Govindraj Ethiraj.
The Sensex crosses 81,000. Markets hit records for the fourth day in a row. So the stock markets shot up suddenly in the second half of trading day on Thursday and took the benchmarks, the BSE Sensex and NSE Nifty, to record high levels. The markets were subdued to lower in the morning, thanks, I think, to weak global cues, essentially tech stocks coming under pressure on Wall Street, mostly on concerns of overvaluation. a concept that seems a little alien in Indian markets right now. The Sensex crossed the 81,000 mark for the first time, and the Nifty 50 crossed 24,800 in intraday trade. At the end of the day, this 30 stock Sensex index ended at 81,343, up 627 points, while the Nifty 50 closed at 24,801, up 188 points. IT stocks did well, and we'll come to Infosys results in a moment. Interestingly, or perhaps not, the broader BSE MidCap and SmallCap indices fell, though marginally. The rupee fell too on Thursday, almost breaching its record low on corporate outflows and oil companies' dollar bids, according to Reuters. The rupee settled at 83 rupees 65 paise against the US dollar, down from its close at 83 rupees 58 paise in the previous session. Its all-time low was 83 rupees 66 paise on June 20th this year. So the gaps, shifts, and moves are, of course, small in the rupee because it's largely kept like that. But a lower or falling rupee is, of course, a minor cause for concern. And the rupee did weaken despite broad declines in the greenback, that's the US dollar, and US bond yields. The dollar index was up slightly on Thursday after declining to a 4-month low of 103.6 in the previous session, said Reuters. Infosys beats street estimates. IT services major Infosys net profit rose about 7% year-on-year to about 6,368 crore rupees, beating street estimates. The second largest IT company in the country's consolidated revenue for operations for the April to June quarter, which is what we're talking about today, rose 3.6% year-on-year to about 39,000 crores, according to a stock exchange filing reported by Money Control. Infosys further surprised analysts by raising its revenue growth guidance for the financial year 24-25, that's what's running right now, with the metric being raised in the range of 3 to 4%. Analysts had expected or anticipated Infosys to maintain a 24-25 revenue growth guidance at 1 to 3% in constant currency terms or mostly dollar terms. However, quarter on quarter, Infosys' bottom line fell 20%, thanks mostly to a tax refund boost in the preceding quarter. The company revised its annual growth guidance 5 times in the previous 5 quarters, says Money Control, and the latest was in the March quarter when it slashed guidance to 1 to 3% thanks to weakness in the discretionary and digital project segment. Business Standard quoted the Infosys CEO saying that there were 3 reasons for their strong guidance. First was the strong first quarter, which was because of strong volume and good financial services outcomes in the United States. And third, a very strong large deal and in-tech acquisition which got closed in time. Infosys saw its headcount come down for the 6th consecutive quarter by around 1,000 people, though the company said it would add around 15 to 20,000 freshers this year. Attrition rates were at about 12.7% from 12.6% in the previous quarter. Shares of Asian Paints fell by as much as 4.5% in early trade on Thursday, a day after it reported its steepest quarterly profit slide in 3 years thanks to weak demand and price cuts. Reuters said inflation-weary customers were switching to cheaper options, forcing Asian Paints to cut prices, though marginally. Now, the interesting part is that Asian Paints has been alerting a slowdown in consumption across the economy, and it has said that its revenue slipped in the last quarter on tough demand conditions amidst heat waves and India's national elections. India stares at a record rice inventory. In commodity news, the government may cut the floor price for basmati rice exports and replace the 20% export tax on par-boiled rice with a fixed duty on overseas shipments, according to government sources who spoke to Reuters. And the reason? Rice inventories in India have hit a record high. India, also the world's largest rice exporter, imposed various curbs on exports in 2023 and continued them in 2024, largely in keeping with the election season or the likelihood of high prices affecting electoral outcomes. Now, the expectation is that the basmati rice's minimum export price will be lower to about $800 to $850 a ton, down from about $950 a ton to boost shipments. Lowering the minimum export price would also help India retain its market share against Pakistan, which exported a record amount of rice this year thanks to India's export curbs, said Reuters. India's aviation sector is soaring. India's aviation sector experienced its highest half-year traffic on record this year, with close to 80 million passengers from Jan to June, compared to 76 million for the same period last year, according to data from the Director General of Civil Aviation, or DGCA, compiled by Business Standard. Now, these figures are about 12% higher than those of 2019, the last full year before the COVID-19 pandemic. Usually, this is the year used as a benchmark for many things, including, of course, travel. Interestingly, the data suggests India is amongst the few countries that quickly rebounded and surpassed pre-pandemic numbers last year and, of course, continue to grow. Although June saw a decline in passengers compared to May, it was the best June on record for domestic air traffic in India, with about 13.6 million passengers compared to about 12.4 million in June 2023. That's for 1 month. There is, of course, a capacity problem in India too. Over 100 aircraft are grounded across the country, including from airlines like Go First, which stopped flying last year, and other airlines like Indigo, whose aircraft or their engines are facing spare part problems. The number of operational aircraft in India is now below the 800 registered with commercial airlines. So fares are high and load factors are strong. All in all, good for the airline business. The most of the profits right now are sitting in Indigo's books. The four Tata airlines, that's Air India, AirAsia, India, now AIX Connect, and Vistara, control about 29% of the market, and Indigo is around 60%. I reached out to Vinay Kumar G, Vice President and Sector Head of Corporate Ratings at ICRA, who looks at the aviation sector, and I began by asking him of the overall capacity versus supply trends he was seeing and how that might play out in coming months.
So largely, if you see in terms of, as you rightly said, the both the international also and domestic also has crossed the pre-COVID level. So if as we speak for FY 2024, the traffic was around 376 million as against 341 million of FY 2020. So largely this is supported by the strong traffic that we are seeing both from the domestic side. It is the leisure and business has come back, and there is a lot of connectivity that is happening to both Tier 2 and the other airports, which is also supporting. Network connectivity has also improved over the last 4-5 years. So this is supporting the overall passenger growth that we are witnessing. And for FY 2025, we expect the total PAX growth to be around 8 to 11% at aggregate level. Domestic would be around 8 to 10% growth. They are at around 307 million in FY 2024, should reach around 330 to 340 for FY 2025. International is expected to be a little higher in terms of the growth, around 10 to 14% in terms of the growth rate, from around 70 million in FY 2024 to around 77 to 80 million in FY 2025. We expect the growth to sustain at these higher single digits or double digit in the near to medium term.
So one of the figures that I'm looking at, Vinay, is the international traffic, and the number, as I can see, is almost up 48% for the first 2 months of this year. So international seems to be growing much faster, although on a different base. So how are you seeing the trends, and how is capacity in that context?
So international has, I think if you see the recovery wise, the recovery in the domestic was much sharper post the COVID, once the COVID restrictions were removed. Only in March 2022, the international has been opened completely. So there is a catch up that is happening. So that's why you see the growth in the international on the higher side when compared to domestic growth. As I was saying, around 8 to 10% for domestic for FY 2025 versus around 10 to 15% in terms of the international. And this would continue because if you see in terms of the numbers wise, domestic has actually crossed the pre-COVID level in FY 2023 itself, whereas it took some time for the international. So I think FY 24 has reached that level, and this year it should cross the pre-COVID level. So there is a catch-up that is happening. So that's why the growth in the international at this point of time appears a little on the higher side when compared to the domestic.
And overall, how are you seeing capacity, Vinay, in terms of airlines, airports, in a sort of very broad sense?
I think if you see the key major airports like broadly Delhi, they have completed the capex. So currently the capacity is increased to 100 million from 66. Bangalore also has completed. It was increased from 20 to 45. Hyderabad also completed 12 to 34 million. And the other major airport is Mumbai. So currently in Mumbai, the Navi Mumbai airport construction is happening. That is at around 20 million packs. So largely that is expected to be operational in December 2024. So the key major airports where there is a kind of a constraint in terms of the capacity, those have actually upgraded the capacity, and at least in the these current increased capacities would be good enough for the next 5 to 10 year period. And largely, once they are reaching that level, there is small bottlenecking that they can do so that they can actually service the higher capacity. But in terms of the capacity wise, with the large addition that is happening at all the key major airports across India, we are adequately placed. And generally, the growth has been at around 10% historically. That should take care of the growth. The current capacity should take care of the at least medium term growth that one could see in the market.
So this is the good part. And if you were to look a little ahead in the larger aviation and aviation infrastructure context, so what are the concerns or challenges ahead?
If you see, the key development or key capacity expansion is happening largely from the private airports. Largely, these are driven by the private airports. So most of the key major airports are operated by the private entities, and these are driving it. And if you look at the AAI, so they are also the AAI in the ministry. They have plans to increase. Currently, the total operational airports in India are around 150, and they have a plan to make it almost double it to more than 300 airports in the next 10 years period. And this would require largely sizable capital expenditure, which anyway AI is doing. And more than that, it is the last mile connectivity, because some of these airports in the tier 2 and the other parts of the country where the infrastructure may not be sufficient enough to fly all kinds of all kinds of airlines. And largely, that would be one major challenge, how those new airports will come up and what will be the kind of passenger ramp up that one could see in those airports.
Most of the traffic in India still seems to be between the two or three key metros. I mean, as I can see, I'm talking about domestic now. Will there be enough business and business sense to, let's say, for so many airports to service regular flights? And is there sort of that kind of demand projection?
If you look at the data, like I think I was just looking at for the top 10 airports, what has been the growth from FY 2020 to 2024. The passenger growth for the metro airports has been at around 9%. When compared to that, for the non-metro airports, basically I had looked at the next top 15 airports. The growth has been at around 11%. So the growth in the next top 15 airports is much higher than the top 10 airports. And actually, it is complementary. If you look at the way it works, is that most of the airlines have developed the network in such a way that people come to the major key airports, and then from there, there's a connecting flight. So largely, it has a complementarity because one feeds into the other. So we think that both the airports should actually register healthy growth. And in the last few years, at least, given the increased focus of the government on improving the tier 2 and other UDAN airport connectivity, we are seeing good growth visible in the next top 15 airports and other airports also. And we expect with more airports becoming operational, that should continue in the medium to long term.
Vinay, thank you so much for joining me.
Thanks for your time.
Is revenge travel over? Speaking of aviation and travel, Bloomberg is reporting that airlines in Europe are now feeling a cold chill wafting over from the Atlantic, their term, from their US counterparts. Of course, this is peak summer in the Western Hemisphere when everything is usually busting at its seams, including, of course, aircraft. On Wednesday, United Airlines became the latest carrier cautioning weakening profitability, joining the likes of Alaska Airlines and Delta Airlines at Bloomberg. The interesting thing, of course, is that airlines are warning of falling ticket prices amidst a fare war that's weighing on their profit and hurting them at a time when there is a peak. But the problem also seems to be that airlines have hiked their fares so much that there is resistance now setting in, particularly in some key markets. Or, put differently, revenge travel is now giving way to regular travel. Last week, as we also reported on the core report, Lufthansa cut its profit outlook for the full year and warned that breaking even would be challenging. Qatar Airways has cautioned that higher capacity in the market is putting pressure on fares. By the way, I can tell you anecdotally, Qatar Airways quotes some of the highest airfares out of India into the Western region. Bloomberg says that this is a reversal from the post-pandemic rush when ticket prices soared as people splurged on holidays after 2 years of home confinement, a term that was called revenge travel. But one key factor seems to be corporate travel, which typically balances out deal-seeking holidaymakers, and that hasn't rebounded properly post-pandemic, adding more uncertainty to airlines' outlooks, says Bloomberg. And finally, before we go, here's some feedback, and we usually use this day, that's Friday, to bring it back to you. Paras says, I'm a regular listener of your podcast. It's a good way to start the day. It helps me get an idea of what are the key things to watch out for affecting the economy. Kudos to your entire team. He also says that he likes our weekend edition where we cover a particular sector via interviewing a business leader. He also suggests and asks if we could interview academicians on topics ranging from government policy on PLI, that's production-linked incentives, to climate change to geopolitics. Tamonash Pan says the topics are well diversified and are discussed, and as and when needed, some of the terms are a little tough to understand. Maybe you can explain such terms when you deliver the news. Absolutely, Tamonash and Paras, both points well taken. I will be more careful when it comes to explaining terms. And Saisi B says, Govind does an absolutely stellar job on this. I hope more people find this podcast. Yes, indeed, Saisi, I hope I've got that name right. I do hope more people find this, and I do hope more people like you share your views, and we'll be more than delighted to carry them here. On that note, see you next week. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.